So much more excitement to come today on this part 3 of the Sustainable Investment Forum Europe 2020. We've got an exciting panel coming up for you. I'm going to present to you a UNEP FI focused panel discussion on nature, biodiversity and the blue economy, unlocking the potential of nature-based solutions to close the finance gap by 2050. It gives me enormous pleasure to hand over to Jessica Smith, Nature Lead at UNEP FI. Jessica, the virtual floor is yours.
Thank you so much. It's a pleasure to be here. And honestly, I couldn't have asked for a better lead in than Kareen's comments on the risk side, because the risks and the opportunities are tied together. And as Kareen mentioned, the climate and biodiversity agendas are two sides of the same coin. So we're going to focus in the next panel on the opportunities around nature-based solutions. And I'm very proud of the work that UNEP and colleagues have been doing to measure the finance gap for nature-based solutions. And we understand there's at least a $4.1 trillion gap towards nature-based solutions. But on the upside, we've seen that the 450 financial institutions in the Glasgow Financial Alliance for Net Zero have 130 trillion. And I know we just mentioned, let's blow everybody away with stats, but 130 trillion assets under management. We also have the science telling us, and there's been some great work over the past years quantifying how much carbon ecosystems can sequester, and at least 37% of the solutions to reach the Paris Agreement are going to come from nature. So really, this is the same topic, climate and nature, and the opportunities around nature-based solutions. If we can bring the one slide up now, I want to flag that the United Nations, through the UN Environment Assembly, so this is the body that talks about the environment across the whole UN, it's a universal membership body, has made the first multilateral agreement on a definition of nature-based solutions. And this means that all activities in the multilateral space, including climate, biodiversity, and finance, now have a united definition around nature-based solutions. And the resolution says, in order to meet both the joint challenge of climate change and biodiversity loss and sustainable development, we need to be looking at nature-based solutions. So I have here a graphic that has a number of examples of different ecosystems. And this focuses a little bit more on tropical and, on terrestrial and freshwater, but we're going to talk a little bit about marine ecosystems as well. But, in the last 5 years, we really had such a lot of scientific insight into nature-based solutions and how much ecosystems are part of the solution. So we are going to be focusing on opportunities today on the panel, and we have an absolutely fantastic rundown of speakers today. So we have Marion Maloney, who's head of responsible investment and governance at the UK Environment Agency Pension Fund. Judson Berkey, managing director and group head of sustainability and regulatory strategy at UBS. Ross Brooks, who's the investment director of Katapult Ocean. Catherine DeConnick Lopez, who's global head of ESG at Invesco, and Robin Millington, who's CEO of Planet Tracker. So we're going to be, having a fantastic balance today between an asset owner, a few asset managers, and then a service provider to the markets to give us some different perspectives on nature-based solutions and, particularly the opportunities there. So if I could start with you, Marion, if you could just tell us a little bit about how you view this topic as an asset owner and what has been your experience looking for and pursuing nature-based solutions in your portfolio so far.
Yeah, thank you, Jessica. So, we have nature-based solutions in our portfolio, and I want to give some reflections in terms of what we found and what we're looking for when we invest. A few things. One is, the first thing that's really important to point out, we're after a financial return. We are here as a institutional investor. It's not a charity. We're after investments that can deliver that return. and they do. And so I just want to make that point. Actually, we can deliver that return alongside the biodiversity gain as well. So some of the things running through, one is around pretty darn obvious, but I want biodiversity improvement. And for that, I want to be able to say at the end, I've got net gain. I've improved the biodiversity from this investment. So for that, the sorts of things we want is baseline monitoring right up front. I mean, it's a lot easier when you get involved with the investment right up front and say, right, what's the baseline monitoring showing us? Give us some reporting as we go through, and therefore we can show at the end the impact we've had around biodiversity. Carbon removal, obviously, is a key part of it. I want that carbon removal to be permanent. And the sorts of things we've required as an investor is to have it put in the contract in terms of legal agreements. If for example, we've got a forest, then we want a legal covenant on that forest to say that it will always remain forest. We want verification standards. If it's in a voluntary market, we want to know what verification you're using around carbon and making sure that it's appropriate for that particular location. And linked to climate change, I want to understand, are you thinking about physical risks? Because we've had investment opportunities come to us where they're proposing something. And when we've asked 5, 10, 15, 20 years down the line, what are you going to do, for example, around water, etc., actually that hasn't been factored into the investment. And so that's not for us. So for all of those, I want to make sure that they're considering those. Now, alongside the environmental and the biodiversity is obviously the social side. Really key, I think, for nature-based solutions. I want evidence that that asset manager, that underlying manager is working with the local community. If there's native communities there, their rights are being protected, they're being informed. The jobs, I want the local people being trained up and using those jobs. I want access, if there's access to that area by the local community, that has to retain fair land acquisition. We've had one particular investment where they work very closely with NGOs right up front from years in advance, in fact, and the NGO is really excited by it and they want to share that best practice. That's the sort of thing I think that can deliver real good. Now, all of these nature-based solutions, I think, offer fantastic high impact. I've got a net zero for the fund around get to net zero by 2045, but actually this is delivering far more impact. What I want to see is around standards, satellite monitoring. I want asset managers that know their stuff. And as part of this, we've often used third-party providers to come in and say, actually, can you check this? Just to make sure that actually what's being provided is right, because I don't want any sort of reputational risk to the fund by investing in this. Can I just finish by saying we've achieved all of that? All the stuff that I've set out is stuff that we've achieved and is there. And what's fantastic is what I'm seeing in the pipeline is a lot more interest in this, both from asset owners and asset managers. So I'm really looking forward to the kind of the new stream now and seeing what's coming on board from providers. Thank you.
Thank you, Marion. And you raised so many points that I'd like to come back to, but I never feel like there's enough time. I always want to have 10 hours rather than 45 minutes or 60 minutes. But I think the link to the physical and reputational risks, and I know Judson's one of our task force members on the TNFD, as Karine was just previous. The social side, the issues around land tenure, technology, and the role of third-party providers and verifiers. So there's a lot to pick up there, but I want to now turn to our suite of asset managers that we have on the call. And Judson at UBS, we really hear that UBS is ahead of the curve and has been promoted, by IUCN and others in terms of giving you kudos for the initiatives that you've done so far in nature-based solutions. So I'd love to hear a little bit more from you on that. I know you're doing some great work on mangroves, for example. If you can tell us, what UBS has been doing in this space and what you've learned so far.
Particularly related to carbon, actually. They are reported to have about 4 times the storage of carbon as land-based forests. They can actually be quite effective in terms of flood prevention. You have some estimate they're up to 50 times more effective than concrete seawalls or other sort of sea barriers that are artificially created. So 2 years ago, we started to look into this in some depth. We needed to partner up with an institution. I think that's one of the key points I'd like to make on any of these nature, your topics. It's really critical to partner with institutions who have that technical expertise, the scientific expertise that we don't necessarily have in the first instance as a large financial institution. So we basically came together with the Swiss government and a firm called Earth Security to write a report just on the topic, just to sort of scope out what this is all about. And it was an interesting sort of case study looking at mangroves. About 50% of mangroves globally are probably degraded already. But in this report, we looked at 40 cities globally, 40 key point regions across the world to think about what could be done to try and restore some of those mangroves. And those 40 cities account for about 70% of mangroves globally around the world. And so we calculated this through and came to 700,000 hectares that could potentially be restored in those 40 areas. And that would potentially sequester up to 380 million tons of CO2, metric tons CO2. So that's on order of about Australia's annual carbon emissions. You're somewhere between Australia and Mexico, I believe, based on latest reporting. So it's great to think about the theory of this and understand it better, but really the next step for us was to try and put this into practice. So we continued that partnership with Earth Security, and just last fall, we essentially helped get off the ground some initial efforts to turn this actually into investment products, investment vehicles. So we provided some of the seed capital. We also partnered with our private wealth management clients and basically matched some of the philanthropic funding that they might have wanted to put into this. Really, the goal is to do a pilot use case, and that's currently going on in Indonesia at the moment. And then really to build this out into actually a fund structure. We're quite excited that this is one way in which you can sort of bridge a bit the local with the global. We heard earlier about the challenge with nature is it is highly localized, but obviously we as a large global wealth manager and asset manager are quite interested in things that can scale out, and we can essentially tap into global capital, but then obviously redirect that back to local activities. So this is early stage, but we think it's a great example of what could be in terms of nature-based solutions that have the carbon benefit as well. Potentially also tap into local social benefits. And one of the motivating factors for us actually was there was a municipal bond that the city of Miami actually floated in 2017. It's about a 400 million municipal bond, but almost half of that went to mangrove restoration. That was a little bit the light bulb that went off for us that there's potentially real scale here, and cities are interested in this because it's part of their own climate adaptation work. And so if we can find a way to tap into essentially global capital pools, redirect them into local, partner up with governments, partner with the scientists. So really is your chance here to bring a lot of different aspects to bear and hopefully try and scale up some of these nature-based solutions for the 37% that you talked about.
Mm-hmm. Great. Thank you, Judson. And I think that's just so encouraging. And I heard a lot of valuable points from what you said is, one, we're talking about financial institutions. We don't need to reinvent the wheel because there are skill sets around ecosystems in other organizations. And it's just a matter of partnering, not, trying to make sure that the FI, builds whole new departments in ocean science or mangrove science. Like those skills are out there. We just need to get the partnerships in place. Then I heard also around, the possibility for co-benefits. So, it sounds like the key metric that you're using is GHG emissions and sequestration. And then, there are co-benefits to ecosystem services from having, or additional ecosystem services from these types of nature-based solutions. And then the link between the local and global. And I think that's something that, now that we're also familiar with climate in the finance sector, is just grappling with the location specificity of nature and biodiversity, but then the need to, consider this in a global scale, and particularly when, we need financial vehicles that are at a much, much larger scale to be sort of investment grade, is how do you address these scaling challenges? So I think, Judson, you raised so many great points. And if now I can come to you, Ross, you work entirely in the ocean space, and I know you're really thinking about the cutting edge in terms of how to use data and technology a bit more in an innovative way in the ocean investing space. So could you tell us a little bit about your work in nature-based solutions and what have you learned so far?
Yes, can do. Thanks for having me. Yeah, just to start off with, I guess I'm coming from a little bit of a different point of view to others on this panel. We are an early stage venture company investing into ocean technology. We're small and we have we're small, but we have actually, I think, the largest ocean tech pipeline in the world, and are the most active early stage investor in ocean technology. We're an impact investor, which essentially means that we are appreciating environmental capital contribution, and in the same way that we've talked about pricing in negative externality risk in asset pricing, we should also appreciate the financial upside from positive externality creation. And I think that's really the thesis around natural capital that we're following. So what have we done so far? We focus on the ocean at large. So we're making investments into to blue energy, for example, to blue foods. But we have also made six seaweed investments. So that's ranging from direct cultivation through to biorefinery, all the way through to end products. We believe we should be covering that whole that whole value chain to promote the product class and to get more consumers directed towards this really impactful area of production. Let's just focus on seaweed for a minute. Seaweed and sequestration in the ocean. The science is a little bit unclear, but emerging very quickly towards a very concrete, measurable carbon sequestration from seaweed farming. Carlos Duarte is the leading authority in that matter, and he'll be producing some harder numbers in the coming months, I believe, on this. When we're able to accurately measure carbon sequestration from seaweed farming, I believe you'll be able to unlock a really scalable, franchisable, financeable economic model for scaling seaweed cultivation in, for example, Northern Europe. And supplement impact commodity, i.e. biodiversity credits or carbon credits, on top of the commodity yield, i.e. the raw product. The raw product can be used for nutraceuticals, in your cosmetics. It can be used as an alternative protein source. I think instead of using soy-based proteins, seaweed is a 11 times faster growing crop in the ocean, and also has a tremendous biodiversity benefit to ocean creatures. So I guess what I'm trying to say here is there's a tremendous opportunity in ocean natural capital. Seaweed is just one option. We've talked about mangroves briefly, also seagrasses. I think the more intangible the natural capital contribution, the more important data becomes. So we're also investing into data solutions. I can envisage a world where we can have, for example, sponsored monitoring of marine protected areas with autonomous vessels, hydrogen powered, for example. And we've invested in such a company already. And then a measurable fisheries benefit and biodiversity benefit through, for example, eDNA measurement, and enabling a kind of blue bond finance model around marine protected areas. We can't do that without ocean data. And I think we will cover ocean data a little bit later on. But I would say to Inspire, that would be one supreme enabling technology to capitalize on environmental capital contribution in the ocean and beyond. So investors on the call, I think, watch this space. Biodiversity credits, carbon credits from the ocean, and also enabling technology through ocean data.
Wonderful. Well, Ross, I'm so excited. The idea of, independent vessels monitoring marine protected areas and the kind of new, finance opportunities that come around that. I also think around insurance as well in that space. I'm just taking notes for myself as well as for the content here. I think it's fantastic. And both you and Judson spoke about marine ecosystems like seaweed and mangroves and seagrasses, which are probably maybe new to many investors who've joined in the call. And, I think when we think about nature based solutions, the tendency has often been to think about terrestrial areas and food and agriculture and land use and, forests. And, even though those are maybe more familiar to investors, there's still a lot of exciting new opportunities coming through in that space as well. So, Catherine, if I can come to you, the work that you have been doing is more in this terrestrial space and more in the food system as well. I would love to hear from you that the Invesco nature-based solutions that you've been investing in, and what have you learned from those so far?
Sure, thank you. And yes, I think I want to pick up on this challenge and opportunity that my fellow panelists have talked about around scale. So Invesco manages over $1.5 trillion of assets across asset classes and across regions. And so we see nature-based solutions and biodiversity issues as a really big opportunity, but also a challenge in terms of scale. And so, having these metrics in a similar way to what we're talking about with climate change. So we have the start of the TNFD. We have now the start of the science-based targets for nature. Those are the types of tools and opportunities that we see for further development, for really scaling, integration of biodiversity risks and opportunities. And so, what we've done to really enable that scaling of integration is to create a proprietary rating system that can really leverage innovative new data sources and build a data warehouse around that. And that is a use in systematizing data to create a more structured signal for our investment teams. We cover corporates and sovereigns, and I would say particularly on the sovereign side, we have had some success in integrating biodiversity type issues, particularly terrestrial issues. So we use Global Forest Watch data on canopy loss and look at that as a risk factor from a sovereign perspective, but obviously also an opportunity to the extent that countries are managing that. That is a future proofing that sovereign issuer. And so that's been, in terms of innovation and investment for us, the sort of investing in the tools and systems to really enable that scaling and integration of biodiversity solutions and considerations has been a really big focus. Another focus for us has been around partnership, and I think the panelists rightly mentioned, no one can do this on their own. There are some very specific risks and opportunities around nature. And I think one of the areas kind of the local nature, but also the breadth of, nature, anything from animal welfare, biodiversity, tree, terrestrial oceans, the list goes on. And I think, this means it's a very complex topic to create one view on. And so another area we've been working on in terms of a partnership in the food and agricultural systems is we've been working with the FAIR Institute on animal welfare in particular, but also looking at their data sets and thinking about how we can further our knowledge and the collective knowledge around that particular issue within the nature space. So more to come, I would say, on this topic, and really, at the start of this journey, and I think we're really digging into it now in terms of providing some of those opportunities and partnerships.
Great. Thank you, Catherine. And before I come to Robin, I just want to come back to Marion as the asset owner. So, you are the UK Environment Agency pension fund. So you definitely need to be demonstrating that you can deliver both the net positive biodiversity value as well as the financial return. You've heard now from the different asset managers in terms of some of the scaling challenges and the data challenges that they face. But, what more do you need as an asset owner, not only to get the pipeline there, but also to demonstrate that, the pipeline is delivering the biodiversity benefits that your, pension subscribers are expecting?
Well, I'm really encouraged by what I'm hearing. I think this is quite exciting. I think we're standing at a point where I think this is all going to mushroom, which is fantastic. So what I need is that data and evidence. And I think it's coming. I mean, we've heard today of a few systems there, but I think people are far more aware of this. TNFD has been fantastic in terms of raising the profile around this. The issue, I suppose, is on our nature-based solution, I've got shed loads of data. In certain asset classes, my sustainable forestry, agriculture, I've got the data there. And I agree with all the people who have said, there isn't one simple metric. It will depend from farm to farm, from location to location, season to season. And that is the challenge. But having said that, I don't care. I mean, give me the data and I can say, listen, I can do something to aggregate it within my portfolio and to demonstrate that. So I haven't got a problem with that. The issue, I suppose, is looking at it across all asset classes. I've got lots of information in my private markets. The question is, can I do that in my equities, in my passive and when I want data around biodiversity? I think that's the challenge around getting that around that mainstream company. I was really encouraged earlier when we were talking about the engagement. I think it was Karina who said about 3,000 was it so engagement with the companies. That's fantastic. I want all asset managers out there, whatever the asset class, talking to the companies and saying, listen, what are you doing about this and how you're integrating it with, it's not just about carbon. So yeah, I think it's exciting, but there's a lot more to do. So we all just keep pushing on this agenda.
Great. And at least two of you have now mentioned TNFD. So not yet, but I'm going to come to you, Judson, as one of the task force members in a moment. But I want to come to Robin now. We just hear, data, knowledge, information needs in this space, in the food and the blue economy space, which is less well known to investors. But, as Ross and Judson outlined, there's so many opportunities, and we're just dipping our, I don't know if Judson said toe or foot. We're just dipping a tiny piece into this huge ocean of opportunity in the blue economy and ocean space. So, Robin, what kind of products and services can you offer, and what kind of strategies do you recommend to investors who have data and knowledge needs around nature-based solutions, and also linking those to demonstrating that it's part of meeting their net zero targets?
Sure. Thank you. And thank you for having me onto the panel. It's wonderful to be in the choir of the willing and hearing so many good stories about the things that are actually happening. I would say that it's becoming a bit of a prevarication. Marianne, I was very happy to hear you say that you do have the data, because I do believe that the data is there. The problem is the data is not there perhaps in the digestible way that people are used to in their various analytics that, if you will, in business as usual context. One of the issues that we see is that in the analytics, if you just do a normal, let's say, Tesco, everybody from the analysts through the back office knows what to do. If you're actually now looking at a nature-based solution and it's something that you don't have fit into your normal analytic structure, not everybody all the way from the analyst to the back office knows how to grapple with it. The information is hard to find. It may take 2 weeks, not 2 hours, to be able to dig into something. So we really do feel that there has to be an incentive now given so that people have that time in order to spend the 2 weeks, if necessary, bringing that data together so that there's a cohesive data set that can be talked to. And it's thrilling to hear about the number of engagements that are going on, because that's exactly what needs to happen. We have shown with just the data available today that you can start looking at instruments. We have suggested, for example, a blue recovery bond. You pay the fishers not to fish for 5 years so that the fisheries can recover. And then if the fisheries recover and they meet the contractual requirements, then you begin paying back on that. We have looked at a deforestation bond, so the sustainability linked bonds that are linked to the actual resource recovery are going to be much more effective. We have some concern, I must say, about normal green bonds. Some of them are very high level and perhaps not specifically linked to resource recovery. But if you get into specific linkages, you can actually start having real impacts. A group, Cicero in Norway, is actually now serving, in a sense, like the typical credit rating agencies, and looking at the green bonds and rating them. Are they really having impact or aren't they having impact? Sticking to the theme of oceans, we've done a huge amount of work on it, and I invite you all to go to the Planet Tracker website. We have a number of interactive dashboards so you can play with data across a number of issues that we've been working on. But fish is a very important issue. Fish doesn't sit in any GICS or NAICS code that you can think of. So the normal industry designations are hard to use, and many of the financial institutions are organized on, say, GICS alignments. Fish doesn't sit there across 3, 4, 5, 6 different GICS codes. Who owns that analysis? We need to start looking at this as a resource-based analysis, not just as an industrial-based analysis. And if you look at fish and begin realizing the benefits, because 3 billion people depend on wild catch fish for their primary protein, and fish, if they're massively disrupted, will start depleting the phytoplankton. Once you get the major predators coming in that eat phytoplankton, and you say, why is phytoplankton important? Well, it's the forest of the sea. If you want to get the benefit of carbon absorption, you can't disrupt the fisheries any more than they've already been disrupted, or that carbon absorption won't be easily obtained. And therefore, all of the projections about how the oceans can be a carbon absorption source becomes a bit of a paper-based net zero analysis that doesn't really have reality based around it. So we believe that there are very actionable topics that can be taken now in nature-based solutions. We do believe the data is there. We believe that you can do today anything, you can analyze it, but we have to have the incentives in the analytics arena so that you have the ability to spend the 2 weeks, not the 2 days or the 2 hours, getting to the heart of what needs to be measured.
Mm-hmm. Great. And I think one point that you made when you opened, Robin, we are in the choir of the willing. And I agree with that. I think right now the people that we're speaking to are first movers who see opportunities and who are ready to capture those. But we're really talking about a voluntary space. Apart from a few small jurisdictions, or not small jurisdictions, but small examples of jurisdictions and products and different types of ecosystems, we're really talking about voluntary initiatives and being proactive in looking for the sustainable finance opportunities. But now that we have this UN definition, we're also expecting the global biodiversity framework later this year to call for alignment of all financial flows, similar to what was in the Paris Agreement around 2.1c, calling for the alignment of financial flows around net zero. We're expecting, this call for alignment of financial flows and elimination of subsidies and bringing new finance for nature and nature-based solutions. And in the global biodiversity framework, there's actually a draft target, which seems to be, fairly agreed, but, it's never agreed until it's signed off, calling for disclosure of all corporate and financial impacts and dependencies on nature. So, many of us are reading that as bring TNFD into policy and regulation. Jensen, as somebody on the TNFD, the task force itself, are you just seeing this, accelerate at a pace that you weren't expecting? Were you expecting it to be more of a voluntary market initiative a little bit longer? And where do you see the connection between the risks and the opportunities side for investors?
Thanks for that your question, Jessica. And I think clearly your nature is a bit following the climate playbook, as I try and describe it sometimes, and your TNFD is part of that. Obviously, the name harks of TCFD, and in many cases trying to achieve some of the same thing. I would highlight 3 key differences maybe in terms of TNFD versus TCFD. The first instance is trying to do both a risk management and disclosure framework. So it's really there trying to support the overall capacity building on risk management activities and essentially try and grapple with some of the challenges that were highlighted about sort of structuring some of the data, trying to standardize some of the measures. I don't think we will be able to come to that single measure like we have for CO2 equivalents. Second key difference I would say on a TNFD versus TCFD is TNFD is trying to work a bit more iteratively. So there was a first beta framework release already about 4 to 6 weeks ago, and there will be 3 to 4 more releases over the next 12 to 18 months. And really the intent there is to gather feedback from the market as we go, to really allow for piloting to be done, and really to not only help capacity build, but also crowd in different feedback from the market. And that's really my third key difference is this idea of really crowding in, not crowding out. We really absolutely want to work with all the great knowledge partners that are part of the overall TNFD forum, including UNEP FI, which has done great work in this space for many, many years. So we want to thank you, Jessica, for all the work that you do with your colleagues. And really TNFD is trying to be sort of a hub that can pull everything together, help structure it, as Robin said, and make sure that we have some clarity on just how we bring the data into decision useful formats. So your question, is it accelerating? Yes, absolutely. And I think that's great. So, pressure on us to deliver something. And clearly there's also a lot of standardization now at work in terms of sustainability reporting generally. So I think there's even a handoff or a place for all the TNFD good work to go. So would encourage everyone who's watching this, who hasn't engaged with TNFD yet, go to tnfd.global on the web. There's a platform there that you can really sign up to, engage with the content there. There's a forum you can join to get periodic updates from the TNFD, and certainly we want everyone to be part of the process of and essentially co-creating this as we go.
Great. And Catherine, I'd like to come to you. So you mentioned, watching for the TNFD framework and watching the developments in the science-based targets network space. How your investee companies, how are you engaging with them? Are you suggesting that they set science-based targets? Are you sort of engaging with them around what metrics they're using? So, what would you be looking at in terms of the actions that you're taking now, and how these processes that are happening, at a sectoral level, how are they going to help you in your role?
Yeah, no, absolutely. And we have a very broad engagement platform at Invesco. We actually recorded 3,000 company engagements last year. Now, not specifically on biodiversity or nature, it was the broad gamut of ESG issues. But still, a very significant increase as well over the last 2 years. We're really adding 1,000 companies a year, and that's through not just my team, but really our investment teams, increasingly seeing the materiality and the need for this kind of conversation with our companies that we invest in. So that's incredibly encouraging. And I would say in terms of some of the specific conversations on biodiversity, that's absolutely happening. Right now they tend to be focused on the risk area and on the supply chain. I think the science-based targets for nature will really enable more targeted conversations around company commitments, measurement systems, frameworks, etc. My understanding, though, of the science-based targets for nature is that the companies themselves, not just investors, not just the financial community, but also the companies are actually finding this incredibly complex to measure and to get the data for their impacts in supply chain systems, operations, etc. And so that's obviously a real challenge at their end as well. And so if the companies don't have the data and can't disclose it, it's very difficult for investors to then manage against that. So it really is about working together, I think, to establish some of those frameworks that we've talked about, and definitely starting to have the conversation is also important. I think we have had some success, right? There's been the palm oil initiatives, the soy-based initiatives, initiatives like that have already a relatively long history of success, and I think that's what we can build on in that investor corporate engagement.
Great. Thank you so much. And, Ross, there's so many developments in the kind of mainstream, sustainable finance space. And you mentioned you're really active at the early stage, and really in the kind of pipeline creation and a little bit, higher risk in terms of some newer, innovations, and, some of them may fly, and, we hope they all do, but it's kind of a frontier space I think you're operating in. Now, do you see a lot more attention from sort of larger investors to, get involved and partner with you on these kind of early stage investments? Do you see that there's more market interest in sort of like speeding up the growth of this pipeline of potential investments?
100%. Yeah, I thought this would be happening 3 or 4 years ago, but I think maybe I was a bit too ahead of the curve, or too optimistic. But I think the last couple of years things are really kicking off. The European investment, or the European Commission, has allocated 5 times the budget now to blue investments, up to 500 billion euros. The UK now has an initiative of about 500 million pounds to deploy into blue initiatives. We do see increased appetite from follow-on investors, so later stage VCs. A lot of private equity players are trying to secure some carbon sequestration through their portfolio. So there is a lot of stuff moving. I would say it's still not enough. Just to give you a sense of the underinvestment in the ocean space, this is 99.9% of the livable space on the planet. It's huge. If you want to generate power in offshore environments, if you want to farm below the surface, the volumetric space there is incredible. So if we're thinking about nature-based solutions and what the kind of biggest bang for your buck you can get, we should really be looking at the ocean. It's we really haven't been looking in that area before. I think some of the challenges as well with the ocean space is that it's typically very industrial. So you have shipping companies, shipping owners, very industrial, large lumps of steel which have a yield. It's not really a venture game, so it's quite hard for startups to penetrate that market. I think with aquaculture you have some kind of similar characteristics, but now alternative protein players becoming more and more interested in ocean proteins. But yeah, I think now it's going to start to take off. Coming back to the point, though, I think we touched upon a little bit earlier with the blue bonds and the fisheries, and also these kind of top-down approaches to encourage more investment to the blue economy. I don't think that's where the bottleneck is these days. I think it's really about the investable projects and designing products that are investable. So I think that's a large part of what we're doing at Katapult Ocean, is to try and we have an accelerated program. We're looking to de-risk the investments at the early stage to provide pipeline to larger investments further up. But also when it comes to, for example, natural capital projects, how do you create this payee environment for a blue bond, for example? How do you bring artisanal fisheries into the fold of this, of a taxonomy? 50% of the wild catch globally is made by artisanal fishermen. This is community orientated. So how do we work small scale, bottom up, as well as top down to create investable projects with new financial instruments? I think that's a really key area, which is maybe a little bit out of scope for this discussion, but I think maybe for next year.
Great. Of course, please do.
Just adding to that, because I can imagine, Ross, if you gave me an idea here, right, and I take it to my pensions committee and say, hey, listen, this could be fantastic for carbon sequestration. In terms of the due diligence around that, these really fantastic nature-based solutions, and I mentioned before a whole host of things that we need to look at. But actually then at the final stage, I bring it to my committee, and I'll give an example of one. Last year, we invested in this fantastic nature-based solution in Paraguay, and we did shed loads of due diligence. And when it got to committee, and we had shed loads of information, we looked at left, right, and centre. One of my committee members went online and Googled, and it was planting eucalyptus forest, but it was also with a large set aside, which a huge amount of benefits. Anyway, And what we saw, or what the members saw, just from one simple Google, was a eucalyptus forest in South America doing very bad things, managed very poorly. And so, as long as making, I could show how it's going to be completely different to this. But in terms of that third-party verification I mentioned earlier, using a third party who was technical experts to understand and provide the committee with details around if that using eucalyptus on poor arable land actually is fantastic around carbon sequestration. We could have third-party provider could give us a scientific evidence to show that. And that's, I think, for all these nature-based solutions, is they offer a little bit, they offer fantastic impacts, they offer a bit more risk, and you need to do a bit more due diligence around it. But if you tick all those boxes, wow, you're left with something fantastic that, really, my membership, this is the sort of thing they want in my portfolio, and it's all helping towards 2040. And actually, it's not my portfolio, Jessica. It's 40,000 members that I'm serving. So just to say, it's exciting times, but we need to put the work in to make sure that we can meet all of those challenges.
Wonderful. Well, I couldn't have summed it up better myself, Marianne. So that's fantastic. I think this is a new but very promising space. High demand. The policy and the finance are coming together in the same direction. The risk side is getting a little bit more consistent. We're coming up with more harmonized metrics, better technology, and so I think the message is watch this space. Next year I think we're going to have even more great examples and even more contribution to this 4 trillion nature-based solution finance gap, and a lot closer working between the climate and biodiversity finance space. So we at UNEP FI are really excited to continue to work with particularly banks, insurers, and investors, and through our relationship with the PRI in the Investors Leadership Program and the Coalition for Private Investment and Conservation. So see you next year.
Yeah. I hope so, Jessica. Hope I'll be here next year. Love that. Yes, what a new and exciting space, as Jessica said. So enthralled, inspired by that discussion, everything and more that you needed to know about nature-based solutions. They, as was stipulated very early on by the investor, provide financial returns. That's a good starting block, but partnerships, data, so much to get our head around there, and so many opportunities as well. There's a challenge, there's an opportunity around scale. We talked about seaweed, mangroves. Wow, 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 wow. So inspiring, brilliant to be educated and inspired by such wonderful panelists. Thank you to Jessica. Thank you to all those panelists as well for sharing your invaluable insights.